Well, I have a special guest here today who's a subject matter expert in VA loans. I'm excited to introduce you guys to her. Her name is Brenda Herrera. Please welcome her.
Woo! Hi, everyone. It's very nice to be here. Thank you for inviting me.
Yes, well, thank you for coming. I really wanted to do this podcast with you because there's a lot of misconceptions that a lot of people have about the VA loan. For starters, I would like to talk a little bit about the VA entitlement and how the veteran can use it to their full maximum benefit.
Yeah, so about VA loan entitlement, basically this is when you already own a house, right? So you already own a home. Let's say you were stationed in Virginia. Now you're moving here to San Diego, and you want to keep your home in Virginia and you want to purchase here. You do have to check to see how much entitlement you have left over. The good thing is that here in San Diego, the loan limit is 1.07. So that gives us a good amount of entitlement left. So then you're able to still purchase a second home with 0% down.
Got it. Okay. Well, what about if the veteran doesn't have any more entitlement left over or doesn't have enough to buy here in San Diego again?
Okay, so if you've already used your full entitlement, there's something that's called a one-time restoration. So this is when, this is actually a new rule, by the way, because it wasn't a rule before, but it became a recent rule that they did. Basically, you convert your VA loan into a conventional, so that frees up your entitlement, and then you can purchase a new home using your VA loan at its full entitlement.
That's so amazing. So you're saying that you can reuse your VA loan more than once?
Correct.
Okay.
Yes.
Well, you heard it here. You can reuse your VA loan. Okay. Well, you know what I would also like to talk about is I have a lot of clients that bought in 2020, but they weren't able to, they think that they're not able to use their VA loan again. What can they do if they bought their home in 2020, they have a lot of equity left, but they may not have full entitlement left over? How can they reuse their VA loan?
So an option, I actually have a couple clients that are like this because they have like 2%, 2.5%. So they don't want to touch their interest rate. They want to keep their loan the same. You can actually do a HELOC, which pulls the money from the equity that you have in your home, and you're able to cash it out to purchase another house. So that would be an option, whether you have to bring a down payment because you don't have left entitlement, or you can use that down payment for a conventional or FHA.
Okay. So then you can reuse your VA loan just as long as you have HELOC or you have some of that money for a down payment, correct?
Correct.
Okay, awesome. Well, you know what? This is a really great way for veterans to build generational wealth. We always hear it every single time. Higher ups usually used to tell me all the time, hey, buy a home wherever you're stationed at. But nobody really tells you how. And so you're saying this is a way that we can do it here in San Diego.
Yes.
Amazing. Okay. So we talked a little bit about the VA loan entitlement, how we can reuse it. Obviously, if you're here in San Diego and you want to buy again, you would have to be creative and use the HELOC. But if you're in another state where it's not as expensive as San Diego, you're saying that we can reuse the full entitlement to buy.
Yes. We actually had a client like that recently. Yeah, she owns a home in Florida, and she PCS'd here, and she was able to use the remaining of her entitlement to purchase a second home or a new home.
Yes, she was. And she was 25 years old, by the way. So she was able to own two homes. She bought one in Florida and she bought one here in San Diego County as well. Yeah. So it's possible. And the really cool thing is that she's also generating income from that property as well, because like many other people, they bought in 2020 when interest rates were at 2%. So she's able to cover that mortgage and then some and have it help pay for the mortgage here in San Diego.
Yep.
Pretty cool. Okay, so I do want to talk a little bit about there's a rule here in California. If you decide to do this where you buy another home, but let's just say you have it for up to 3 years, there's a rule that everybody should know about, and it's called capital gains. So capital gains tax. I know a lot of veterans, they do want to do this program where they do the HELOC and buy another home. But one thing that they should know about is a tax rule, and it's capital gains. And if you don't, if you keep it within the 3 years, you can avoid capital gains tax. But if you go over it, you are at risk of having capital gains tax. So there is certain rules and there's strategies that me and you are able to help our clients the best way that we can.
Yeah.
Yeah, I do want to talk a little bit about if they do decide to sell a home, what can they do to bring down the balance of their new home?
So I actually have a client right now that purchased in August. He already owned a home in Texas, and he purchased here in San Diego. He didn't want to deal with like the tenants anymore, so he just sold his house, and he actually used the money that he made from the sale of the house to bring it to his home here in San Diego. And he was able to do a mortgage recast where you keep the same terms, you just bring your loan amount lower so your monthly payment goes down. And it's really cool because he gets to keep his lower interest rate.
Well, nice.
Yeah.
I actually also have a client that we did that as well. They bought their home about 10 years ago, but they were deciding of whether it's same. They didn't know if they wanted to rent it out or, sell it. So they wanted to test the waters, and they bought a new home, but they kept their first home as a rental. Long story short, they quickly figured out that they didn't want to be a landlord. And all the expenses, everything adds up. So we actually sold their home, and all the profit that they got, they actually put it down towards their new balance of their new home. Oh, wow. So for them, we actually sold their townhome in San Diego County for $630. They actually netted around $500,000. The home that they bought in Chula Vista was $825,000, and then they actually put the $500,000 towards their principal. So right now, they're sitting at a home in Chula Vista with a $300,000 balance.
That's
and
crazy.
Yes, and that's one way that you're able to use this mortgage recast, and to be able to, one, save you money, two, get you out of the tax rule of the capital gains, and three, you're able to live just freely, knowing that you're not paying, today's prices. So that's the power of real estate and what you can do to be able to generate wealth for you and your family.
Yeah.
Yeah. So there's another thing that I would like to talk to you about, and it's seller credit and the misconception that we often get with the VA loan and what we can do. So can you talk a little bit more about that?
Yes, so a lot of times people think that they can only receive 4% in seller credit with VA loans, and that's actually not true. You can actually receive more, and you can allocate it to different areas. You can pay off debt. You can buy down the interest rate permanently. You can do a 2-1 buy down, for example. So those are like really huge key factors that you're able to use your seller credit to its full potential.
Okay. Now, I want to talk about the seller credit. You did mention the 2-1 buy down. We recently did have a client where we were able to negotiate $15,000 in credits. So where did he allocate those credits to, and what did you do?
So I was watching the interest rates like a hawk, and at that time, rates have been pretty consistently around like 6.2, but they just happened to go at that time at like 5.75. He had money left over. He did the 2-1 buy down, and he still had money left over, so he still bought the rate like a little bit down, and he ended up locking at like 5.25. So his first year, he's actually going to pay 3.25%, which is crazy in today's market.
Yes, those are actually COVID rates.
Yes.
And one thing about that client, we met him at an open house. He was also freshly out of the Marines, and he was just getting back into the workforce and understanding the VA disability rating and all that. So we were in contact with him for over a year, and we were able to do this. One of the biggest things that he kept mentioning to us was that he didn't want his payment to be over this because he did not feel comfortable. But he has been living here in San Diego for so long that he did want to own. And so the really cool thing that I think you did was definitely look at the interest rates all the time, and being able to lock him in at that rate was really, really great. And I know he was super happy about it, because before, at the time when we were in escrow, interest rates were at 6.2. Mm-hmm. So the fact that you were able to lock him in at 5.2 is a huge, huge, huge advantage. Yes. Okay. Also, I do want to talk a little bit about, if the seller does give you seller credit and they give you at least 4%, can you use it for other things?
Yes, so you can actually pay off debt. Didn't you have an example when you purchased your house, how you used your seller credit?
Yes, I did. So I bought a home in 2022. It was towards the end, so November time frame. Interest rates just went up to 6%. So I understand everybody that's buying in this market, 6%. It could be really hard to wrap your mind around this. So I did buy, but we did negotiate the max credits that we can. So it went towards our closing cost. It went towards like a rate buy down as well. And then also the sellers decided to take all the major appliances away. At the time, me and my husband, we were like, well, we don't have a stove, a fridge, a washer and dryer. And all those things adding up was going to be around $5,000, maybe even $6,000. So our lender at the time, he was like, you can actually pay off debt. We didn't have any debt on our credit cards, but what we were able to do was actually swipe our card, go to like a Home Depot or Best Buy, I believe, and just put it on the credit cards of all the appliances, and it actually got paid at the close of escrow.
Nice.
Yes.
Wow.
So you can do pay off debt if you can. It just depends on what your situation is, correct?
Correct.
Okay. And didn't you have another client as well that they had some student debt loans, but they decided to pay off something else?
Yes, so I had a client that had more than enough credit, and they, like yourself, they didn't have really a lot of debt, so they didn't really have anything to pay off. The only thing that they had was student loans, and they were like, we're not too worried about the student loans. We're making like really minimal payments. We rather pay off our cell phones. So they actually used their credit card to pay off their phones, and then they paid it with the remainder of the seller credit.
Nice.
Yeah.
So it's really, the VA loan is very complex, and not well complex. It's very unique, I think, because working with other loan programs, this is one of the best loans that you can be creative. Mm-hmm. I do think the veteran or active duty personnel has a very good advantage, and if you have a VA loan available at your disposal. Yes. Well, I do want to talk a little bit about the VA escape clause. I don't really hear people talk about it enough. So with the VA escape clause, what would you say is the best advice you can give, or what does that do for the loan?
So the VA escape clause, it just really helps the veteran or active duty service member protect their EMD. So if they can't lose it, in case something happens, they can actually receive that money back, because the VA escape clause is saving them from losing that money.
Yes. So the VA escape clause actually keeps your earnest money deposit safe. It's a little bit more complex, and we can give you more information if you guys want. It basically, what it means is, if we put an offer in for $500,000, that means that the VA appraisal has to come back at $500,000. So if it doesn't, in the case, there's ways that we can fight against it. We can contact the VA and submit something that's called a tidewater, or we can negotiate the price down, or you can actually back out and keep your earnest money deposit safe.
Yes.
With the VA mandatory clause, it's for VA and FHA. So if you're conventional, unfortunately it doesn't have this clause, so it's a layer of extra protection for the veteran. So Brenda, what is one advice that you would give to a veteran if they were watching this video and they wanted to reuse their VA loan?
One thing I would say is to work with someone that's very familiar with VA loans. If you could work with another veteran, that's awesome, because no one's going to know the VA loan as much as them because it's their benefit as well. So I would highly recommend to work with someone that's very familiar with calculating how much entitlement you have left over, or just any kind of ideas that you will be able to get from them, because, we know the benefit.
So you're saying that it's important for you to make sure you do like a background check of who you're working with and working with another veteran.
Yes.
I do believe that as well. I do believe working with another veteran that understands the VA loan definitely makes a huge difference in your transaction. Yes. So what other advice do you have for somebody that may not be ready yet, but, are interested in using their VA loan?
I would still say to talk to a loan officer just to kind of see where you want to be at and then where you're currently at, so then you can have a set plan. If you have a plan, I feel like you're set for success. So if you know where you're at, I know it can be scary sometimes because I know a lot of people get a little bit nervous. You don't have to necessarily do like a hard credit check. You could just like talk to them and tell them exactly what's going on with your finances, so they can set up a plan for you to go and be able to achieve that home ownership goal.
Yeah. Have you actually successfully done that, set a game plan for somebody and execute it?
Yes. David was actually one.
Yes.
The one that we talked about.
Yes. And that's also why I'm saying it's really important for you to work with a veteran. Not only did we help David buy a home, but we also connected him to somebody that in the workforce that helped him get a civilian job.
Mm-hmm. Yeah, he did have an interview with, it was a DOD job, but he found something better, which is fine. But it was just like, the care of connecting with him, because, I went through the same situation as well when I was getting out. We did talk to him about getting his disability, and because he was kind of like nonchalant about it. Yes. So we put some fire there, so he was able to get his disability. And yeah.
So the disability, it does help with the VA pre-approval.
Yes, it does, especially because we can gross it up by 25% because of the fact that you don't pay taxes on it. So the amount that you're getting, we just multiply that by 25%. So it actually increases your purchase power.
Wow, amazing. And then with being a veteran and you are disabled, you're receiving at least what I think is 10% disability. Mm-hmm. What does that do for you?
So if you're at least receiving 10% disability, you are waived from the funding fee. A lot of people sometimes don't really know what the funding fee is, but if you're not receiving at least 10%, the first time you use your VA loan, it's going to be 2.15%. Anytime after that, it will be 3.3%.
Got it. Well, I do want to close this up with just one more question about the VA disability. Mm-hmm. If the veteran is 100%, how can they use that to their benefits when buying a property here in San Diego?
So if you're receiving if you're receiving 100% disability, you can actually go to the county assessors, take your DD 214, take your benefits letter, and they can actually lower your taxes. So your property taxes. So yeah, that's an option.
Yes, and also property taxes does save you on your monthly payments as well, right? Mm-hmm. Yes. Yeah. Yes, it does. And about an average, how much money do you think you could save a month with getting your property tax exempt?
That one, it just depends.
Okay.
I don't think we should talk about that because it depends on how much income they make.
Okay.
So there's no exact amount.
Okay.
Yeah. And I don't know on top of my head. So.
Well, thank you, Brenda, for coming to the show. We talked about so many things. How we can reuse our VA loan, how the veteran can maximize their benefit. It's a great tool to have, and just thankful that we are able and blessed to be able to use the VA loan.
Yeah, thank you for having me.
All right, see you guys next time.